the management of ABB. In fact, the company, the top management chatted with my colleague Vivek. And just to refresh your memory, ABB reported very strong numbers. Q4 calendar year 23 numbers were ahead of street estimates. The Q4 revenue growth is the highest that we've seen in the last 5 years, a growth of close to about 14%, record high order wins too. Listen in to that conversation Vivek had with the management.
I think it is the continuation of our business engagement strategy for India. As we explained to you when you visited us last time in Pune, Bangalore. Herein, the 18 business divisions which operate for us in the country, they engage in 23 market segments. So one is that we continue to make our portfolio broader. We continue to localize it. We continue to engage even deeper into the market segments we have identified, which are relevant for us. And also in the geographies, we are doing even higher penetration in the unserved market. So that's the combination which plays for us and works for us.
Mr. Sridhar, let me come to you now. At the start of 2023, we were working with three numbers. We were working with a revenue estimate of 10,000 crore, a gross margin in the range of 35 to 37%, and PAT margin in the range of 10%. You've handsomely exceeded all of that. Going into 2024, what are the targets you're setting? And also, would you agree that gross margins have peaked out, most of the operating leverages have played out, and we can maybe accept some softness going ahead?
Thank you. Thank you, Vivek, for this interesting question. I think every time you make me, you ask me the same question. So I think ABB for 2023, as you rightly mentioned, has delivered a strong result from what it was in 2022. Right. So I think the gross margin at this point of time is, excluding the material cost, is holding at 35%. Right. So we are now around 63% on the material cost, and hopefully I think a range between 63 to 65 should be an acceptable range, considering the fact that we have a backlog which consists of a good mix of project orders, service orders, as well as product orders. So I think that's something what we feel is a good area for us to keep improving, doing localization, taking leverage of the capacities what we have, and of course the optimization actions and the localization initiatives what run quite substantially within the organization, the different 18 business units, as what Sanjeev was mentioning. So I think this pursuit of excellence in these topics will continue, and we are confident that this will help us to remain steady in what we are in the range where we are today.
Would you be able, or have you guided the street for a specific set of numbers to look out for in 2024?
Vivek, as you know, we don't give any forward-looking numbers. So we only give a directional view about it. And so that was what I was mentioning about in my last
question. Can understand that, sir. Sanjeev, sir, coming back to you. Now you are sitting on, what is probably a very, very strong order backlog. Give us a sense of the order mix-up. We understand that some of the orders that you're sitting on are slightly higher margin orders. We also understand that you've done some premium pricing in some of the projects that you're present in. So give us a sense of, the order segmentation in terms of short cycle orders. Last quarter, there's a bit of softness over there. And also, how's the export market looking like?
In our books, we have seen booking of some large orders, especially coming from railway market segment, and with the result, and also in certain process industries. With the result, what we have is our traditional mix of 9% of projects order has moved to about 15% of our books. So that's a kind of a change that you can see from the mix from our ETO business, which is engineer to order, and stock to STO, and the other type of product business that we have, product business mix we have. Services business stays steady and they are growing, and also our export business has grown in value terms, but in percentage term it looks dwarfed because the domestic growth is much stronger for us.
Mr. Sridhar, one more number. ABB Global, when they declared their results, they said that India is growing at close to 16%. But if we see your own order backlog growth or the order inflow growth, it's much higher compared to that. Can you explain the differential to us? And also going forward, is there an expectation that there may be some moderation as far as order inflows is concerned, especially against the backdrop where we will see the election code of conduct coming into play?
Okay. So I think, Vivek, so how does ABB globally look at India is how much do they source into India? So that's basically what is the care parameter is what you say. That means whatever imports what we do from India, right? I mean, for India, for production of India, and also for the direct orders, what goes into the global market through for exports is something what they look at, and that is called as a demand view. A demand from the country for ABB products is what is basically they sum it up and see how is the 16% growth. But when we look at it, we look for those which we are servicing in India, right, which are just not ABB product solutions. We also have other products which we factor in and give it. So it's a more of a local demand as what we are talking of, right? So that's why you have a global giving a number of 16%. And when we see, which is called a supply, which is basically supply into the country, we'll talk of 23%, which includes both the local demand and the exports what we are seeing.
All right, that's the management of ABB India talking about how they see business shape up at the end of what's been a really good quarter. We'll take a break on that note, come back on the other side, and Ajay Vora of Nuvama Asset Management is going to join in.